There's been some volatile stock movements following earnings this week, with Twitter missing the bar on monthly active users and Groupon suddenly seeing a surge in its stock price. Not to mention Pandora, whose shares shot up following acquisition rumors. Matt Lindley and I are here to break it down for you.
It's been a crazy earnings season.
Yeah, I know.
Lots of volatility here with these stocks. I think an unexpected one today, Groupon is soaring like 30%.
Yeah,
Who would have thought?
What's going on? I mean, everyone loves to hate on Groupon. What's happening here?
Yeah, they beat across the board on revenue and on earnings, and then they've been significantly cutting costs. They have a new CEO, Rich Williams, who he's been at Groupon since 2011, but he became CEO in November.
So what, that's like the third CEO since 2010 or something like
Yeah,
that?
they've had a few different management changes, not surprisingly, because they're just, right now they're trading at $2 something a share, and they priced to 20 in November 2011. So that usually brings about management changes.
Are they still a unicorn?
Yeah, that's what I noticed yesterday. I noticed that they're still worth about $1.5 billion. So you would think, given all of this, everything people say about Groupon, that they would be worth less than that, but they're still alive and apparently going up today in the markets.
Who would have thought? Okay.
Who would have thought, right? But their problem was he says, at least when I talked to the CEO, Rich Williams, he told me that they were just getting too distracted by too many international markets, and that 85% of their revenue comes from their top 10 markets. So they're just going to focus on the markets that they do best. He said San Francisco is one of them.
All right.
And people are buying these coupons on mobile, but just only really in these 10 cities. So they're just going to focus their efforts, and it sounds like, at least for now, that's a strategy that worked. And also their fourth quarter holiday season did better than last year. So
nice. All right. Well, now there's a little bit of optimism. So we'll see how that continues to go, and it's just like you sort of see it going like crazy. So. So speaking of stocks going up and down and left and right and so on and so on and so forth, Pandora had an interesting day, to say the least. And during regular trading, we saw it go up like crazy because apparently there were some talks about them selling themselves. Pretty good timing.
The New York Times had a story out by Leslie Picker, and it said that Pandora has been trying to sell itself, which makes sense, actually. I actually thought for a while now that they would try to sell themselves. They decided on their rates in December, and so now they know their costs for the next 5 years, the royalty rates.
It was a little bit less crazy than what they were bracing for, like a worst case scenario, right? And it was a little bit less crazy than that, right?
Yeah, I mean, so they were bracing for that's exactly right. They thought it was going to be worse than it was, but their costs have still gone up. They're still going to have to pay artists more than they previously thought, but not the doomsday scenario that people were anticipating, but they couldn't have sold themselves before that decision was made. And so now it makes sense for Pandora to be up for sale because they've been struggling, and it just, they're having a tough time. It's a public company.
And of course, speaking of struggling, their earnings came out, it was pretty mixed, but of course, like anything they got, they sort of promptly gave it up. I forget exactly how much it was down, but it was down a pretty significant amount. So we'll see. I think you're right. It's perfect timing for something like that, and then maybe it was pretty good timing for the story to come out.
Right?
Yeah.
And then Twitter had an interesting time this week. They actually have flat growth. They even saw diminished growth in the U.S.
So if you exclude SMS fast followers, their users actually went down a little bit from 307 million to 305 million, but for the sort of core Twitter usage. But across the board, it was about 320 million flat, which, for a company that really, really, really needs user growth, not so good. It's kind of like falling flat on your face for something like that. So.
They've really had a tough time. Jack Dorsey took the helm in October, and then he also is the CEO of Square, which went public in November. Both of those stocks have not been doing well, but then again, not a lot of tech stocks have been doing well. But those two in particular, Square stock actually it's not doing so terrible, but it priced at a valuation that was pretty low.
Yeah.
So both are seeing tough times. Twitter, they just can't seem to make it work.
Well, Jack himself says it's a confusing service, and there's a lot of things that they need to fix. Some of the rules they were looking at was potentially changing rules around @ replies or the sort of .@ name like nomenclature for some of the things that are happening. But yeah, it's been a good earnings season so far. It's been pretty exciting, right?
Yeah, definitely a lot of volatility. Hopefully, yeah. It's been kind of sad. There's something in my building that shows all the tech stocks, and every day I come out and it's like red. So hopefully we see more green, like Groupon,
Yeah.
right? The last one you'd expect to be soaring. So,
Yep.
Well, that's it for earnings season. We'll be back in March for Box and Square.